Okay, well, thank you all for coming today. We are excited to go into a little bit more depth on the FFCRA, all of the setup that we did in the last webinars over the last couple of weeks, to show you how the accounting works on this, and also how to actually process payroll all the way through. Today, just a couple of housekeeping things. We are recording this webinar and it will be sent out as a recording afterward, so that you guys will be able to review that after the fact. Also, today I'd like to introduce a couple of special guests that we have here with us. Gary Gilmore from which is the senior product. What is your exact title, Gary? Senior product manager?
Correct. Yep.
Senior product manager of Vista.
Correct. Yep.
From Viewpoint. We also have Randy Crawley from support at Viewpoint.
Morning.
Sharon Simpson from professional services at Viewpoint.
Morning.
And Jenna Bonham and myself from Silvertrek. Jenna is the technical sales consultant here at Silvertrek, and she holds this all together. And I'm the president of Silvertrek, working with this team to get all of this FFCRA work done. Like I told Sharon this morning, I'm relieved that no new laws or additional guidance has come out for an entire week. It was great. Today our agenda is pretty easy. You guys should be able to see my whiteboard here. The agenda looks like this. We're going to, first of all, go through the accounting, and we're going to look at the T-charts and say, what are we trying to do with the setup that we talked about last week? Then we're going to switch over to Vista, and we're going to run a payroll. And this is a simple payroll, but this is going to be from soup to nuts here. We're going to try to enter in some time cards with the COVID earnings. We're going to run the payroll process. We're going to look at the employee pay sequence control, and we're going to attempt to even post to the general ledger after paying these employees, and see how that works. And then at the end, we're going to leave some time for some Q&A. As you can see on the side there, on their sidebar of the GoToWebinar, there is a spot for questions and a little chat menu there as well. As we go, I'm going to be presenting, but all the others that are here are also available to answer those questions. At some points, they'll stop me and ask some of those questions if they're relevant to what I'm presenting on right then. Otherwise, they'll do their best to answer them as we go, and we'll have some time at the end. So feel free and ask a lot of questions. Honestly, the questions that I've gotten from these webinars over the last few weeks have been instrumental in making sure that we are on the right track. People asking questions about the way the law reads, people asking questions about how it's set up in Vista, and going through and doing the research to answer those questions has been what has gotten us to the point where we're at today. So continue to ask. They're very valuable. Okay, jumping in then. One of the things that comes up quite a bit is, how is this actually being accounted for on the backside once we post this to the general ledger? And how, we talk a lot about in the setup documentation about what accounts to use, and how to use the PR liability setup, and how to set up the PR department master, etc. And so I thought what I'd do today is briefly just review for those of you that are accountants in the audience, how this is actually going to get set up from how the setup actually plays all the way through. So first of all, I was going to just as a brief reminder go through a standard payroll, a payroll that has no FFCRA, no COVID earnings, no COVID liabilities, and then I'll add to that what would happen with the COVID liabilities. So this is going back to your accounting class, Accounting 101. You guys haven't had to do T-charts since you left the green ledger paper. That's why we have Vista, but I think it's always a benefit to talk about this. First of all, we have a few accounts that we care about. One is we're going to have a checking account. I'll just call this 100 checking. And this is a very simple payroll, and we're going to pretend like the money just goes straight out of there. there's no arrears and that kind of thing. We're going to have a series of 200 accounts or liability accounts, which I'm going to call in general PR liabilities. And this is going to be things like our federal withholdings. This is going to be our Social Security. This is going to be our Medicare. It also could be things like medical deductions, medical liabilities. Then we're going to have an account that is going to hold the expense. We'll just say that for purposes of our simple payroll here, that this is all indirect wages. And so it's going to go to 600, and this is going to be an indirect expense account. We'll add to this as we go. But as you know, with a standard payroll, that has we'll just say a single employee in it that gets paid $1,000. Then what we're going to see is a if we would draw this like we did the other day, we would see that his gross payroll is $1,000. There's going to be some deductions out of that, and there's going to be some employer liabilities on top of that. And we'll just say for sake of ease here that this first payroll is $1,000, and that the deductions are $200, and that the liabilities are $200. So what actually runs through on here is, on a standard payroll, is that we have the full expense, or $1,200, hitting as a debit here, $1,200. And we have the full, the net payroll, or $800 coming out. So the 1,000 here minus 200, 800 coming out of our checking account, reducing our asset of $800, and the remaining credit, or the $400. So the amount of money that is from both the employer burden and the employee deductions, this $400 as the credit here. So like I said, a very oversimplified payroll. If you guys had a PR general ledger report that looked like this, I bet you guys would be jumping up and down. But it's much more complicated than that in real life. Multiple employees, multiple departments, multiple accounts, etc. So what happens then if we add another employee that all gets COVID earnings? Well, a couple more accounts get hit, and first of all, there's a new asset account, current asset account, that we recommend that you create. In our case, I think I called it 120, and this was a COVID reimbursable. And this is an asset account, current asset account. And then we also created, in some cases, people were are just reducing an expense, but in some cases they're using a miscellaneous income account, like a 900 miscellaneous income account, in order to not have basically the denial of double benefit as specified in the law. Basically, any credit that you get back, you have to basically pay taxes on, corporate taxes on. So you have to show that there. So if we were to add on to this payroll an additional person that is getting the same amount of money here, but $1,000, but all in COVID earnings, we would still have the same amount of the deduction. The liability would be slightly reduced. For purposes of my little demonstration here, we'll just call it $100. And this is $200, still $1,000 of gross payroll, and still $800 of net payroll. Well, the first part is basically the same. We would have $800 going out of our checking account to the employee. We would have $300 because the payroll burden here has been reduced. $300 going to our PR liabilities, and we would have $1,100 going to our indirect expense account. Now, what the PR liability setup does, the deduction liability setup, via the new payroll liability type on the payroll department and the new account set up on the PR liability setup, is it also will create a COVID reimbursement. And this COVID reimbursement on the basic setup will be with the $1,000 of gross pay, basically saying, hey, you guys are going to get reimbursed for this $1,000, and we're going to have a debit to our current asset of $1,000, and we're going to have an increase to our income account or decrease to an expense account if that's how you have it set up, of that $1,000 there. So the T-chart of the additional work, the additional GL expenses or additional GL transactions rather, are from the liability setup, and they go to 120 and 900 in the setup that I'll show you today for the current assets. Now, a couple of people have asked me, well, what about the Medicare and medical benefits? Don't we get to increase that by that amount as well? And the answer is yes, you do. The basic setup will track the $1,000 or the gross payroll directly there. But what we have to then do is we have to also add on, which I'll show you, I'll add on the medical and Medicare amounts and take that credit as well. When we take the credit, we are going to take the credit and we're actually going to see that additional dollar amount here, 1.45%, et cetera. But that doesn't come through on the liability when you post payroll. That comes later as a journal entry or through AP if you're using AP to pay your EFTPS. So what we'll do is we're going to run through an example payroll today, and we'll see this play out inside of Vista. Okay, I'm going to switch my screens here to Vista Example Excavating Inc. All right, so I've gone ahead and created a pay period for last week. This is a real simple pay period. PR group 100, beginning date 4/6, ending date 4/12. So that was Monday through Sunday pay period. It's all in one group. I have my frequency codes all set up, etc. Nothing special here. Just a standard pay period control. And what I've done is I've gone through and I've said, okay, here's my checklist. I'm sure you guys have something like this that we use Trello for all of our checklists. Basically, we just say, here's, we've checked off all of these things. And we would go through this. I would never run a payroll without actually having some sort of checklist. This is our checklist specifically for Vista, talking about PR check register, PR ledger update, et cetera, PR auto leave accrual usage. Today, I'm showing you a very simplified payroll that doesn't have things like salary workers and doesn't have things like auto earnings and auto overtime, et cetera. So I'm not using this full checklist, but I definitely recommend that you have a checklist. And then we also have what we put in Help Scout, but a documentation that shows people who are new to running payroll what this means. Review payroll notes, that's what you have to do. But what does it mean to actually review payroll notes? And so this article here is just an internal article that we have when we run payroll. It says, say, standard operating procedure with screenshots, et cetera, saying this is what that means. So although I'm going to be running through this without a checklist, just know that I wouldn't actually run payroll without a checklist in case I would make some kind of mistake. Generally speaking, my setup is I have this folder here called Silvertrek Payroll, which I've created, and I've dragged into this the programs and the reports that I feel is beneficial, that roughly follows that same checklist, so that we start with pay period control and we end with the 940, 941 information, et cetera. We will, and so we can, this one's supposed to be at the end here too, federal tax deposit liability. So we're basically going to be going through this in general order. Of course, today, like I said, I'm going to be skipping a lot of these things just to make it simpler for demonstration purposes, things that don't pertain to the COVID earnings themselves. So what I've done is I've entered in a few time cards already on this PO group 100, PR end date 4/12. So I'm opening up a standard batch here. And in my standard batch, I'm just going to go ahead, I'm going to add in all the time cards that I've already entered in. So I've done this for 2 employees with a few entries. So you can see here, I have employee number 1, Carlton Bai, and employee number 6, Nikki Harley. And what you'll see here is that, and I'll start with Carlton By. Carlton By here, employee number 1, is an hourly worker, 36 bucks an hour, and I've entered them in here for earn code 100. If I hit F4 here, you can see all my earnings codes. This is COVID-19 employee, and this Carlton last week was quarantined due to COVID, and all week Carlton had to be out for this at 100% of his wages. So I'm going to go ahead and add the next 3 days in. You can see here I have the first 3 days of the week, 4-6, 4-7, and 4-8, 6, 7, and 8 in here. Now I'm just going to go ahead and add these things in as we go here. So 4-8, 4-9, I'm going to tab all the way through. Notice that I'm leaving the job and phase blank. Some people are choosing to set up a specific job to track all the earnings. I've heard one recommendation was to set up a job as a certified job so that they could track all the fringes on there. You of course can set up a job for this, although you do have to make sure you've set up the liability types correctly in your JC Department Master, or run them through the JC the cost types if you choose to do it that way. I recommend just doing it through PR Department Master and not having a job for these types of earnings. Now I come over, tab all the way over here to earnings code. I can hit F4, choose my earnings code, COVID-19 employee, hit OK. And if I scroll over a little bit further here so we can see rate amount, you can see the rate comes in at 36. I type my hours, 8, and it puts in my amount. I can do the same, come down to the next line here, copy it over. It's copying over here. Whoops, I don't know how that thing stayed there. There we go. All right. 410. It's the last day of the week, and I can add this all in. I tab on over so we can see my earnings code. And if I was to choose caretaker here, one thing you'll see is that when I choose caretaker, because it's set up at a 0.6667, that it adds this rate in at $24 an hour, or 2/3 of the 36. When I add an 8 here, it adds the amount in at that rate. Now, so it's going to automatically reduce that to the 2/3 wages. I can instead leave this at 100, and it will change that back to 36 for me. So far we're good to go. A couple of notes here on how I entered this in. First of all, I entered in Carlton By's time as, even though he was out for all 5 days, I entered them in at 8 hours per day. The reason I did this is that the dollar amount is limited by law on this first earnings code to $511. So this allows me to go quickly through and say, I could, if I have a huge batch with all of my time card in here, et cetera, I could sort to earnings code 100 with the filter bar, and I can make sure that every single day is no more than the legally allowed limit. And I could change that a limit right here if somebody is getting paid over. And if you have them all lumped together, 40 hours, 32 hours, or whatever else, then you have to pull out your calculator and make sure that is done correctly. So we recommend that you just pull these out into separate days, and it allows for easily seeing that everybody was paid the exact dollar amount. It also allows you to substantiate that later if you were ever to get audited. Okay, so I've entered that in for Carlton By. Now, I also have Nikki here, who worked the first 2 days of the week on a regular job and at her regular rate of pay, $52 an hour, 8 hours each day. It was at that time that she had to take time off for the caretaker code. And so for the rest of the week, she was off for caretaker. So we'll go ahead and add these things in for 8 here. Now I'm going to delete my job and phase from there that copied down. And I'm going to come over so I can see my earnings code, rate, hours, and amount. And we're going to enter in the correct earnings code, in this case, COVID-19 caretaker. It's going to limit it to automatically to 2/3, and we're going to get to 277, which I'll come back and address in a bit. We'll go here, the next line, Add the next line down, 4.9, everything copied down, 101, 34.66 or 2/3 pay, 8 hours. And then finally, the last time here on 410, copies all that down. And we have 2/3 pay down here. Now, immediately I can see we have a problem. And this is that earnings code 101 as well as 102, the family leave expanded, but earnings code 101 caretaker has a dollar limit, limits out at $200 a day. And so we need to come in and we need to actually reduce the dollar amount that Nikki's getting paid here in order to comply with the law to $200 a day. A couple things to note about this. One is when I just limit it, when I just change the dollar amount, this will actually pay them the correct amount, but it can be confusing that the rate stays the same. And so it is sometimes easier to just say $25 and let the system do the math for you. 25 times 8 is 200. That'll allow you to do it. Now, other people say, well, wait a minute, I actually want Nikki to be paid the full amount. We've chosen by policy to pay the full dollar amount that they're allowed at 2/3, even if they're over. So if we go in here and we change this here to 101 here, it changes it back to 34. And you can see that we want to pay the $77.33 extra anyway. Well, if that's the case, then we need to pay them on a different earnings code entirely, because earnings code 101 is not subject to employer Social Security, but anything that you pay over $200 a day, or in other words, this $77, if you so choose, is subject. So in order to enter that in, you would enter an additional line, which I'll enter and then I'll delete here, an additional line on 410 for that code, and use an earnings code such as earnings code 1 with $0, 0 hours, 77.33, and then go back and change this to 25,200 so that they get paid the 277 that you allowed by policy, but that this is paid on earnings code 1 with 0 hours. This is essentially similar to how you do like a bonus or other codes, depending on how you guys have your earnings code set up. You do not want the $77.33 here because you'll understate the wages that are subject to Social Security employer. You want to limit these out to the daily limits. And just as a reminder, those limits, like we talked about in the previous webinars and in all the documentation, it's $511 a day for earnings code 100 or COVID employee, whichever number you have that set up, and $200 a day for caretaker and family leave. Now, if I was to enter something in here that has too many hours, let's just say 80 hours, this would give us an error. This error here, posting this entry would result in a negative balance for COVID leave code 6C19 for employee number 6. So the available balance for Nikki is 80 hours. She has 80 hours to pay, and I just entered in something that adds up to more than 80 hours, 96 total, and it would be a negative balance, a new balance of -16. Because I have my PR leave code set up to not allow for anything over 80, this will not be saved. It will not allow you to post this. And so because we can only pay people up to 80 hours under the first two, and up to $10,000 or the equivalent of 400 hours on the third expanded family leave. So I'll go ahead and change this back to 8 again. And I'm going to I'm going to delete this $77 record here just for simplicity's sake. All right, so we have 2 employees. We have Carlton By here for the that's on earned code 100 or the employee code, and then we have Nikki, who worked the first 2 days and then worked the rest of the week as on employee caretaker. So I'll go ahead and process this batch. All right, and we'll post this here. And of course, then I go and I check off my checklist item on my Trello card, because you have to do that every single time.
Hey, Michael.
Yeah, go ahead.
I want to clarify, because you used the word worked as a caretaker, that we shouldn't be paying these COVID caretaker earnings if the employee is working from home?
Yeah, that's an excellent question. If they are teleworking, they are not eligible for this sick leave or for the family leave. It's only if they're unable to work. So I misspoke there. I should if they were not working, they were employed, but they were not working and were on sick leave. Good catch. All right, then we do our salary distribution, auto earnings, etc. But in our case here, we're just going to go to payroll process. I'm going to go ahead and process it for all employees for this pay period ending date. Whoops, unless I hit escape and close out. And I'm going to go ahead and hit process. A lot of times you guys will just do the employees with changed earnings if you have many people in there. This can take a while with a lot of employees. And now I can open up PR employee pay sequence control, and we can see what the effect is of this for these two employees. So first of all, Carlton by, we have our earnings code, earn code 100, 40 hours, $1,440. Everything looks normal there. We have some earnings, etc. of in here. One thing I'd like to point out is that he has a fairly high medical insurance deduction here, especially given how much money he makes. $500 is deducted from his paycheck every week for his platinum healthcare plan. I think it includes yachts or something. But that $500 is important to note because it's a pre-tax deduction, medical insurance pre-tax deduction. So otherwise, everything on here is fairly normal. All of his FICA, Social Security, anything else comes in here and will be calculated correctly. Then when we get to the liability side, we'll start to see things get a little bit odd. First of all, we see the FICA Social Security dollar amount is $940, which is specifically his earnings, $1,440 minus the $500, $940. But his eligible amount is only the negative $500. And for those of you that were on the earlier webinars, this is because this is correct and it should account for this. And then we have the 6.2% of that negative 500. This is a negative amount that we should see back. And we're not going to go into this today, but there I have a spreadsheet, this spreadsheet here, that shows that in order to see the employee's full medical deduction throughout the year, and you can see this in a quarterly basis, we have to allow the Social Security employer tax to go negative during the times that they're making COVID wages. So this is correct to see this negative here with the eligible amount being the amount of the pre-tax deductions that we saw on this tab over there. And then we see down below the COVID employee wages. The subject wages is the amount of the gross wages on this. This is the 704 liability code, and it will take a -1 times that in order to get the calculated amount of the 1440. So far, so good. We're seeing that we're going to get a credit back of 1440, and of course, then before we take the credit, we're going to be able to add on things like Medicare, this 1363 Medicare amount, and we're also going to be able to add on the medical insurance that the employer paid on Carlton Buy's behalf. So this looks good for Carlton. Let's go look at Nikki. Nikki had an interesting situation where she worked for 16 hours and then she was on caretaker sick leave for 24 hours. So we have the $832 here and the $600 there, 16 hours and 24 hours. Now one thing to note when you're this will come into play later, is that there was 24 hours out of 40 hours, or 0.6 of her time of the number of hours was spent of this week was spent on COVID caretaker. The deductions, you can see that there was a $37 medical deduction, much more reasonable dollar amount for Nikki, and we have all of our liabilities. So again, we can see our FICA Social Security here has been reduced. The $1,375 is the $1,432 minus the $37. And then our eligible amount is much less than like our FICA Medicare. And this is because this is only the earnings codes for regular time that we see here. all of the COVID caretaker time, this $600 is missing from the eligible amount here. Although we see it in the subject amount. Calculates our Social Security employer with the reduced dollar amount. And then we see down here on our 705 code, which is tied to our earnings code 101, $600 subject wages and negative $600 as our credit that we're going to get back there. So everything looks good here, and now that we like what we see, we are good to go. So we'll go ahead and print our direct deposit for all of these people.
Michael, before you go on with
Yeah.
that, can I interject a question
Yeah.
that came in a little bit ago? Does Michael know if the 7733, the part that you overpaid because you chose to not limit the wages, is that eligible for reporting credit or loan forgiveness with PPP?
Yes, it is. The only thing that's excluded from the loan forgiveness portion of the PPP is particularly the wages paid on the 101 or the caretaker, employee, or family leave codes for which you received a credit. So so everything else, any other wages paid would be eligible, with certain exceptions like $100,000, et cetera.
Great, thank you.
But the $77 would be yes.
Another question tied to that is, as it just came up today, as we're paying the taxes on the EFTPS, do we pay the negative employer Social Security or bring the amount back to zero? The liability is showing as a negative amount due to one employee, but we're wondering if we should manually adjust it to zero and not reduce the payment by the negative amount. How would you handle that?
So I guess I would want to clarify first, it's not likely that the Social Security overall would be negative on the federal deposit report unless you were only paying, well, even then it wouldn't be negative. On the Social Security report, so the amount that you're reporting to on EFTPS for Social Security wages, that will I would be extremely surprised to see that ever go negative. Is that kind of your belief as well, Gary? Just because this dollar amount has to be added to.
Yeah, I think what's going on here is you need to recognize that the payment is going to be made in the aggregate, and so across all your employees, it's highly unlikely. In fact, we have I doubt that it could ever be completely negative. So go ahead and take the credit. Allow it to reduce both the Social Security wages and the calculated amount of the liability. Otherwise, you're essentially shortchanging your credit and your reimbursement.
Exactly, and maybe we can post in the as an answer to that. I do have a short video, 10-minute video on specifically that question on the website with this spreadsheet available to download, so you guys can play around with how that works, and you can see how this negative plays out over the course of a quarter. Okay, so now we're going to go back to my direct deposit print. I think both these people are direct depositors. We'll go ahead and print this. And I'll just post this to my PDF printer here. Okay, there we go. Now I'm not following my checklist, and so I'm probably going to forget a step. Let's see here. The next thing that I need to do is, I don't believe I have anybody to actually physically print. So I'm going to try to go and update my ledger here. Tab. I'm going to go ahead and update my job cost, validate. All right, and hit preview. Okay. GL distribution didn't come through yet. I forgot something, Gary. Which one did I forget? But we do see the 2 days from Nikki coming through on the job that I posted it to. Let's see here. What did I forget before I can do my general ledger? I'm always forgetting one thing or another.
Did you pay them? Must be a payment.
Did I just pull that out of the EFT payments? That was the one that I didn't do, huh? I don't know why we always have to pay people. We'll pay them at the end of this week. There we go. And we'll update. Okay. Hourly pay sequence 1 here. This is the one. Oh, I see. I just have to download the file. Okay. There we go. 2. No PF records 2. See, that's why I needed Viewpoint support on the line here. CM reference. Payroll entries already exist for this CM reference. Do I just need to do a new one? Oh, I see. I just grabbed a random one. This is probably very painful for most people in the audience because they're the ones doing this every day and they know exactly what I'm doing wrong. There we go. Process 2 records. Here we go. So here's my GL distribution list. And so we can see the monies, the net payrolls coming out of here. We can see this 120, this COVID reimbursable, it's getting debited, just like we talked about earlier. This is the amount of our reimbursable. And the other side of this particular transaction is coming in on our miscellaneous income account down here in the 900s, 92040. Like I said, some people are choosing to reduce an expense rather than putting it into miscellaneous income, but that's just up to you and your controllers. And then everything else is from the standard net payroll is flowing through. We can see all of the insurance happening, coming through. We can see a small credit hitting this FICA, but it is a total net credit here hitting our FICA company, FICA employee account. We have our food accounts, pensions, etc., all the way down. So our $2,040 is our net pay, but then we have all of the other payroll accounts hitting here. So this is what the GL account should actually, or the GL distribution list should look like once you're all done. All right, we'll go ahead and post this. And then we have the fun part, which is how do we actually get our credit back? Well, the credit can be calculated fairly easily. First of all, we get our federal tax deposit liability report. I have mine defaulted in here already with the standard codes, and we'll just go ahead and grab our paid date here of this week and preview this. And you can see here my for this week, I just have my federal withholding, FICA, and our total tax liability. These were just 2 people that had where there was no federal withholding on these 2 people. Of course, in a normal situation, you would have a lot more than this calculated, but this is our total tax liability on a normal week. So we can run this and say, this is what we owe currently for this week. Then we can take our liability amount and we can subtract it out from this. There's a couple different ways to do this. And one of the ways that I've found that's actually fairly easy is I can use this same report and I can just type in the Medicare, the 3 liability codes here. So I have my liability codes 704, 705, and 706. I can just co-opt this 705, 706, and I can run this, and I can see on a weekly basis how much has been calculated here. Now, obviously, because I'm doing it this way, these things don't line up, right? This isn't actually federal withholding. This is 704. This is employee. This is 705. This is 706. So we can see our 1,440 and our $600 from Nikki and Carlton respectively, and our total credit available to us right here. So we can actually just co-opt this same report to get our standard amounts that we can pull off here. Next, what we can do is we can add in the liabilities, the other liabilities that we're allowed to put in on this. So there's a couple of different ways to do that particular piece. And this in order to substantiate this in case of an audit, I recommend holding this in some sort of Excel document per pay period. But I'm going to pull this up in employee pay sequence control because I feel like it's easier to show. Specifically for Carlton Buy, we're allowed to take a credit for not just the wages, 1440 here, but also the medical insurance and the Medicare, the employer portion of Medicare. So in this case here, we're allowed to say, we're allowed to take 1440, we're allowed to take 354.62, which is this dollar amount here, and we're allowed to take 1363, and so our full credit for Carlton can be 1808, and we can take this against our full tax deposit liability spread out over the weighted average of these three. In the case of Nikki, however, we have to be a little bit more careful, and this is where this 0.6 comes in. Remember what I said on the earnings code was that she had worked 0.6 of her time on the caretaker. That just means that for her medical insurance employer here, this 9920, we can only take 0.6 of that on this. So we take 0.6 times 99, I'm sorry, not 0.99, 9920, so 5952, and we're going to add to that 0.6 of her Medicare, 1994, which I'm pulling up right here, times 0.6 there. And so we can take an additional 7148 on top of her $600 of wages, 600. And so for her, we can take $671 of wages. Now, when you do this, I recommend that you do this math in an Excel document, do a new document each time, and save this in your payroll records, because you're taking the 671 for them, you're taking the other amount for Carlton, and you're going to reduce the amount of your liability. They have signaled, the IRS has signaled that they're not going to be penalizing people for late payments because of confusion due to this, but they're still going to want their money. And so if they, you want to make sure that you're saving that accurately. There also is some work that you guys can think about. There's a really good FAQ document on the IRS website as far as what health insurance plans are available for this. Very clear documentation there, and then also very clear documentation on how you calculate the Medicare portion of it, etc. So make sure you have documented those wages and before you take your liabilities. Then when you go to take your liability or take that credit, of course, you'll want to relieve the debit balance that you currently have in your COVID reimbursable of the 2040, and also make sure that you take the full credit into account into your miscellaneous income account when you pay that liability. If you're using AP updates, which I always recommend people use that, if you're using AP updates to update the AP for your federal liabilities, this would show up in your PR deduction liabilities. Say on your federal withholding, you have the IRS set up as an automatic update to your accounts payable. Just make sure that you're set up on your 700 codes or your COVID codes that you would set up that same thing here. Make sure that this is the Internal Revenue Service, IRS, if I can find them here. Internal Revenue Service, so that you would update the same thing here on accounts payable, and then this will send it over to accounts payable, and you can pay it all there via AP without any problems. You'll have to add an additional line to that for the additional Medicare and medical portion of those wages. Finally, for those of you who are using the the plan that we're talking about. So we have just done a couple little things to make this easier for people, and we have a webinar on that on Friday for those of you who are interested. We have created a report that does this magic for you. So there is the and we've set this up on a separate test system here. Basically, a report that will do all of those calculations for you. To save yourself the trouble of having to calculate it, which becomes useful, a little bit more usable if you have, 30 or 40 or 50 employees that are all on COVID wages at a time. That's that paid plan that we're talking about on Friday. Okay, we have about 12 minutes left here, so I wanted to leave some time for questions and answers. I know that we just zoomed through this whole week's worth of payroll very quickly. I'm sure some of you guys feel like you're drinking from a fire hose here, but I'd love to open it up for some questions and get the others involved here. Sharon, do you see anything right now that we should tackle?
I tried to keep up with most of those questions as we went, and Jenna was helping too. So there's only 3 left that are unanswered. The first one has to do with the health insurance credit. IRS says that our health credit can include any pre-tax amounts contributed by the employee. So does that impact the credit we are allowed to take on the wages? Seems like we should not be taking a credit for those pre-tax health contributions twice.
That's correct. So yes, you can take the credit for those, but what's interesting about that is that those are already included in the gross wages. And so if you added those, if you added your gross wages, which are then reduced by the pre-tax deductions, and then took an additional credit for that deduction, you would be taking a credit for that twice. In our setup, we just take the credit for the gross wages and add on the employer portion.
Great. Next question, what type of journal entry would you do to account for the reduction in medical insurance liability?
Sure. Well, let me switch over to my whiteboard screen here. Oh, and I don't think I gave the standard, I'm not a lawyer, I'm not a CPA, please consult with your professionals disclaimer. I actually am quite serious about that. Make sure you're working with your CPA, make sure you're working with your HR staff and lawyers to make sure that this is all correct. This is our best recommendation, and of course, we're hoping we're doing this right, but we do want you to be doing the right thing, and you have professionals for that. So the question was, how do we relieve this? Well, when we go to pay our PR liabilities in the example that I have up here on the whiteboard, of course, we're going to pay the $700 that we owe here, $700. That'll reduce that amount for the 400 and 300. And then using Form 7200 in our case, we would actually get a credit back. So I'll just pretend we get the full credit back here at this point in time. So we'd have a $700 payment, a reduction of our liabilities, right? We're going to have a $1,000 reduction of our asset, and then we're also going to add in a portion of our medical and Medicare. So our Medicare here is going to be 1.45%, right? So we're going to get $10. Let's see here, $14.50 for this, and then we'll just say that the medical portion of this was $100. The employer medical portion was $100, so we have $100 there. So our total credit is going to get increased by $114 on top of this 1,000, right? In our simple example here. What we're going to have to do is we're going to have to account for this 114 as miscellaneous income when we take this credit here. So we now have $700 reduction, we have a $1,000 reduction of our asset, and we have a $114 increase to our income. And the result is that we're going to have through Form 7200 on the with the IRS, they promise it within 2 weeks or whatever it is, that we would have the result. What is that? $414 and 50 cents, I believe. It was supposed to be 50 cents. $414.50 as a $414.50 as a debit to our checking account. So that would complete that transaction, and our debits and our credits are balancing there. Any other questions?
I hope that Jim Weber understood that, because I don't know how to write that in the answer box on the question log. The next
Jim
question,
Weber's a pretty sharp guy, so I think you'll get it.
excellent. The next question comes from my friend Tim Summers. He wants you to use the Magic T accounts to show us how you would relieve the COVID receivable when you reduce your payroll withholdings sent to the IRS.
Well, I think I just did that, although I don't know that it was magic. Sorry, Tim. But that basically, when I pay this, in this case, we would have this get reduced right here on this side. Now, Tim, I believe we've talked about having you. I think you have some of the premium plan. In which case, this, if you're actually using that premium setup, this would have already included the 114.50, in which case you would want to reduce this by the full 1,114.50, and you wouldn't have to do this down here if you're using the payroll routine. You don't have to calculate that manually. Any other questions?
A salary employee will be taking intermittent caretaker leave. What is the best way to adjust salary?
Oh, that's a good question. Gary, do you have an opinion on that?
All right, one more time. This is salaried employees. How to
Yes.
address that?
A salary employee will be taking intermittent caretaker leave. What is the best way to adjust salary?
Well, it seems like the only way to really make this work properly is to post hourly wages, because you have caps involved. You have, with respect to the liability, in terms of both weeks, hours or weeks. So intermittently, I do believe that all of this paid leave need not be taken in one block. It can be taken over a period of time between the effective dates of this program, so now through the end of the year. However, if you are going to pay out some sick leave or extended family medical leave, I think it's best to go ahead and post that as on an hourly basis.
Yeah, I think that makes total sense. I did have one person call me who said that they'd run salary distribution after putting in COVID wages, and of course the COVID earnings are not subject to salary distribution because they're set up for hourly, like Gary just said. And so you have a chance if you run salary distribution on 36 hours and then you pay 4 hours of caretaker leave, you could end up inadvertently overpaying them, basically overpaying their salary.
I think the next question is a good follow-up. I think that Gary might have input for. How can I get my workers' compensation calculation, which is set to straight time equivalent, to calculate on the 2/3 caretaker or expanded leave amount instead of the whole amount? This has to do with the factor, Gary. We talked about it the other day.
Yeah. Well, we haven't, to be honest with you, haven't worked through the details of how that's going to play out. However, to calculate straight time equivalent, we do adjust the earnings rate by the factor. So let us kind of work on that a little bit and get back to you with an answer. I'm not sure how that's going to work yet.
Gary, we did have a support case recently, and we came to the resolution that because it was just a very small number, it was only one employee affected, that is on COVID leave, that we simply did an override to reflect the workers' comp at the 2/3 rate rather than the full straight time equivalent.
Okay.
In the employee pay sequence control, Randy?
That's right. That's right.
Okay.
You're certainly free to go ahead and override anything that you suspect is not, not giving you the calculated result that you need in the employee sequence control, but clearly our objective is to minimize the need for that. So,
Right.
I just have a one or two more. I think we might be able to finish these. If you run the payroll register now and go to the last page, is it normal that all of the employees in the payroll show up in the employee count for each of the new liability codes, not just the employees that are receiving pay under the new codes?
Yes, it would seem normal to me because
Yeah.
we're running this all on the same payroll. In my example here, we ran this, we ran both Nikki and Carlton on the same payroll, so we would see everything all on one here. This both the COVID and the regular earnings. You know, and one of the reasons that we do this, like with Nikki when she has a split week, you of course can run this as two separate pay sequences, which is a fine way to do it. It's just that sometimes that'll get confusing for people with their federal withholdings. That it'll just calculate a different dollar amount because it's not all summed together. But yes, it would be normal, I would think, unless Randy or Gary, you have another opinion, but it would be normal to see everybody on this all together.
Yeah, there's nothing in that report that would make a distinction or include or exclude individuals based on the earnings code that's been used.
And then lastly, Michael,
And
I'll give
also
you a
the
chance.
COVID liabilities are set up.
Go ahead, Randy.
I would just say the COVID liabilities are set up as federal codes, so they're simply appearing in the sequence, even though they're not calculated. And that's why we see all three COVID liabilities, even though the employee is only under one of the three.
Yeah, good point.
And this is internal. These are, unless you choose to add these liabilities to the payroll group master, the employee would never see these, you know, on a pay stub.
Okay, so lastly, Michael, I'll give you a chance to plug. Somebody that wants to know, what does your payroll routine do for us?
Oh, sure. The long, windy answer is going to be on Friday. We're going to do a little webinar to show that specifically. But it basically has a few different parts to it. First of all, in the time card entry screen itself, we have a button here that automatically limits COVID-19 earnings to the daily amounts, the $200 and $511 per day. So that's one thing that it does. The second thing is in the liability. So we have in the liability here on 705 that instead of doing a rate of gross, like we have on example excavating, which is set up on the basic side, we have 705. We have this with a custom routine. This custom routine simply takes into account the dollar limits and the subject amount limits here, and also adds in the medical and Medicare using basis codes. So we can add in the basis codes here, which we can't add in here. Otherwise, we get processing errors. So anything we add in here for medical, dental, vision, etc., would get added in at a prorated basis, the 0.6 like we had for Nikki. So that will post in there. And then finally, we have a custom report so that we can see the tax deposit liability with COVID-19. And this particular report, if we run this for, let's just say 3/1, I don't know exactly what I have in the system here. This adds in the credit, and it will take out the credit for you that you have allowed, prorate it by the amounts, and show you how much you have remaining if you need to file a Form 7200 with the IRS. So it's all fairly simple stuff. It just has it just reduces the amount of work that you need to do, especially when you have many employees that are all on COVID at one time. The basic setup, using the basic setup, you can do everything. You can fully comply with the law. the premium setup that we've built is just to make it so that it's simpler and easier to account for that after the fact. Any other questions before we wrap up? Looks like we're just about out of time here.
There are 3 questions remaining in the grid if you want to go ahead. Why wouldn't the amount in number 900 match the amount in number 120? I'm not sure what those numbers refer to. Shouldn't 1,114.50 hit both accounts? Oh, those are the account numbers.
Yeah, those are the account numbers. And the answer is yes, it will. So under the basic setup, you'll have $1,000 here and $1,000 here. Under the premium setup, you would have the full 1,114.50 here and the full 1,114.50 here. So
Gotcha.
those would match under the recommended setup.
Penultimate question. So none of it is subject to federal withholding, even if not all wages are COVID-19? I think that's just because the amounts, the wages that you paid were low enough. Why did the federal come out to 0?
Yeah, I believe Carlton and Nikki have like 35 children each or something, and therefore have lots of very, very high limits. And so it just happened that these wages were low for them and they didn't have to pay anything. That wasn't actually intentional that I set it up.
So they didn't fill out a new W-4 for this year.
Right, apparently not.
Okay.
Great. Well, you covered all the questions, Michael. You did a great job. Thank you.
Okay, well, thank you very much, everybody, for coming. Thank you, Gary, Randy, Sharon, for coming and helping out here. Thank you, Jenna, for answering those questions. I really appreciate it. Jenna will be sending out this recording of the webinar to everybody. Feel free and send an email to either of us if you have additional questions as they come up. We would love to help. And hopefully this was helpful for everybody. Sure appreciate you all coming, and have a wonderful rest of your day.
Okay, thank you.
Thank you, Michael.
Thanks, everybody.